On May 2nd, Warren Buffett's corporation, Berkshire Hathaway, reported a net loss of $50 billion after a pandemic swept the world, demonstrating that even the greatest minds in finance aren't immune to unexpected events. Even though the company recently reported a profitable quarter, its stock price has yet to recover to pre-pandemic levels. Buffett lost his position as the world's third richest man. Even people like Elon Musk, who appeared to be a long way from Buffett's level, have surpassed him. The market is unpredictable no matter how smart, talented, or hardworking you are. And if you're not careful, you could end up losing everything while believing you've stumbled upon a golden opportunity to become a millionaire. While there are numerous types of mistakes that investors, particularly beginners, frequently make, there are 5 that most inexperienced investors as well as experienced investors occasionally make and end up losing fortunes. If you don't want to be one of them, if you want your investment to grow, if you want to make a fortune in the stock market, then you must avoid these 5 basic mistakes. So pay close attention. Number 1. Confusing investing with trading. Beginners who have just started investing, imagine that you have to find new cool stocks to invest in every day or every week. And if you have spent the entire month not investing in a single company, then you're not an investor. In the world of the stock market, there are investors and there are traders. A trader is someone who buys a stock with the intention of selling it on the same day or in the next few days because the goal isn't to invest but rather to buy the stock and profit from the volatility of the market. Have you ever seen how fast stock prices move? They jump up and down every single minute, if not every second. The price opens up at $100 and closes at $105. So if you trade with $100,000, you can expect to make a $5,000 profit in a single day. In theory, it appears to be a simple way to make money, but in practice, it is far more difficult. In the short run, stock prices are nearly impossible to predict. And as a trader, it makes no difference what stocks you buy, even if the companies are total scum, because you are not looking to keep your money there. That is what distinguishes it from investing. Investing entails purchasing small pieces of business that produce something valuable and grow over time. Your investment's value rises as well. So if you know of a company that is doing well and you know where it will be in 5 or 10 years, instead of reading financial reports and wasting your time analyzing endless financial statements, you might keep investing in that company. Number 2. Investing emotionally. When the price of a particular asset rises dramatically, a large number of people who were previously uninterested in investing become interested. Consider what happened to Bitcoin a few years ago. The price rose so dramatically that people who had no idea what cryptocurrencies were, how blockchain worked, or the technology behind them began buying Bitcoins in the hope of making a fortune. I'm not disparaging Bitcoin, blockchain, or cryptocurrencies, but investing based on emotions is a bad idea. Usually, it ends up being disastrous. Remember the mortgage crisis as another example. Even the most qualified investors couldn't help themselves and jumped in. However, the entire system collapsed and some countries are still dealing with the fallout from that crisis. Even a giant tech company like Yahoo made a bad decision in the late 1990s, investing a few $billion in Broadcast.com, which they had to shut down 2 years later, but Mark Cuban was wise enough to sell his entire stake before everything collapsed. Here's a general rule. If it's already in the news and rising rapidly, you missed your chance. Accept it and don't feel bad about it. That cycle may have reached its apex by the time you arrive. Any investment you make should be based on calculated rational risk. Yes, you may miss out on some great opportunities, but you will avoid the risk of losing all of your wealth and build a sustainable portfolio over time. Warren Buffett, the world's greatest investor, passed up opportunities to invest in Google, Amazon, and many other great companies. There are 2 kinds of stocks to consider purchasing. A stock of a company with a promising future and a current stock price that represents its value today rather than 5 or 10 years from now. Second, a stock that is undervalued for one reason or another. Everything else is most likely not worth your money. Number 3. Waiting too long to start. Time is everything when it comes to investing. The sooner you invest, the more you will earn. $100 invested when you're 20 will grow to $466 by the time you are 40. Whereas $100 invested when you are 30 will grow to only $215 by the time you are 40. That's assuming you put it in an index fund with an annual return of 8%. I know you're thinking, let me wait until I figure everything out. But that time will never come. There will always be something you do not understand. It may sound a little controversial because I warned you not to invest if you don't know what you're doing. That is correct, but you do not need to be a financial genius to begin. If you're not familiar with the stock market, consider investing in an index fund. Number 4. Not being able to look outside the stock market. The coolest investments are in real estate and the stock market, but they are not always the best. My finest investments have all been in companies that I founded. I mostly use the stock market to keep my money growing while I'm working to expand my companies. Considering that if I save them in a savings account, they would go bankrupt from inflation. I therefore make investments in stable businesses with some room for expansion. The market will only provide you with a maximum return of 7, 8, or at most 10%. In fact, every year is different since the S&P 500 has occasionally increased by 20%, while other times it has decreased by 20%. Returns on a small investment in a small company that appears to be successful, on the other hand, could be in the hundreds or even thousands of percent. While you can't do much about these multi-billion-dollar corporations, you do have the capacity and authority to affect them. Don't let the stock market fool you then. The ideal investment for you personally may be right in front of you. And finally, number 5. Investing what you can afford. Getting passionate about investing is simple. I get it. You can see every single number. To load your bank account with those green papers, or to be more careful with those numbers, you want to dive in and nab it. That was the situation with me as well. But you must also consider other factors before you invest your money. If you will need that money to cover vital needs within the next several months, investing is not worthwhile. Why? Read on. Due to the unpredictability of the market, even a large, well-established company may see short-term declines in stock prices, forcing you to sell your interests at a loss if you suddenly find yourself in need of cash. So try not to become too elated. Of course, get going as soon as you can, but be sensible about how much you want to put in. Even if that means just a few $100s a month, it's better to start with something more manageable but constant. If you recently began investing or are very interested, please keep these errors in mind. Other than helping you by sharing my experience with it, that is the only interest I have. Simply put, losing the money you fought so hard to gain at a moment's notice is incredibly unpleasant. I'm not promising you won't lose money because it's inevitable in the game, but limiting losses and errors is essential for success in any endeavor, including the stock market. That's all for now. We hope you enjoyed yourselves and learned something new. If you did, don't forget to hit the like and subscribe button so you don't miss any of our videos. Click on our previous videos and learn 10 things the wealthy do that the poor don't in 2022. Or click on how to make money online in 2022 according to the pros to keep your knowledge growing.